Hey everyone, Brian Hoops from Midwest Market Solutions with Market Insider TV update here. August the 12th, crop report just been released. We'll do a quick run through some of the numbers and the information. So we will not be doing a webinar this afternoon. As I mentioned, I'll be traveling. So let's take a look here at what the USDA had to say. Markets initially reacted to the yield numbers for corn, 181.8 and 53.3 for soybeans. Both are record for the August report, biggest numbers we've ever seen, and that pressured corn and soybeans early. That's well above the trade guess for both commodities. In fact, 2 bushels per acre for soybeans. That's a huge amount. Then you look at last month, we're up 3.3 bushels per acre from last month, well above last year's numbers. And soybeans also a big jump, 3.5 it looks like yield compared to last month. So some big increases in production now for corn and soybeans. And of course, a lot of the trade knows that this is as of August the 1st, does not take into effect the crop damage that was seen in Iowa this week, as they're still assessing that damage. But I think some of the trade believes this could be the largest yield number that we'll see this year because of that crop damage, and corn has bounced a little bit and soybeans have followed along. The bounce is not expected to be long lasting. Let's move down to ending stocks. As we see corn, soybeans, and wheat here. All these numbers are a little bearish, except for the wheat. I mean, it's not bullish, but it is less than expected. Exports were increased by 25 million bushels. That accounts for change from last month. Trade wasn't expecting really any changes. For corn, our ending stocks jumped to 2.756 billion, and soybeans at 610. This is a huge number and well above last month's, up 185 million bushels. Well, we got there. This is how we got there. USDA did lower the carry-in for both corn and soybeans, which helped offset some of the bearishness we could have seen here. So 20 million bushels on corn and 5 million bushels on soybeans. For soybeans, increased crush by 20 million, but no argument there. Exports increased by 75 million. That subject to maybe some revisions. I mean, Chinese demand has been spectacular since July, so can't argue with that. But they already have 400 million bushel increase compared to last year. Now you're looking at 475 million bushel increase. So there's no evidence that we'll see more than the 475, but they did up it, and that limited some of the damage that this ending stock number could have caused. Kind of the same thing in corn. They lowered the carry-in by 20 million bushels. They increased feed usage by 75 and exports by 75. Again, they have 400 million bushels already penciled in for an improvement in export profile. Really don't need to increase exports by 75, and they really don't need to lower carry-in numbers by 20 million bushels when our ethanol production is falling far short of what they already have penciled in on this balance sheet. So there's a couple arguments to be made, but this is what they gave us. So corn ending stocks up 108 million from last month. Soybean ending stocks up 185. These are not bearish numbers, no doubt about it, especially soybeans. The corn is bearish, but could have been much worse. And finally, all wheat, really virtually zero changes here. A little bit of an increase in all wheat. Hard red winter down 15 million from last month, and soft red, the Chicago market, virtually unchanged, while spring wheat up about 27 million from last month. So you're going to see some spread trade, I think, as a result of this. Chicago lose ground to Kansas City. Minneapolis probably lose some ground to Kansas City as well. I think that's how the trade will react to that. As far as going forward here for corn and soybeans, I think your downside is becoming more and more limited in the corn market. If you're thinking $2.90 or $3 for a low, you might want to revise that to $3.10 or so for that corn. We did bounce off of $3.20 support. Soybeans, really no reason to see a significant rally in here, but if we keep seeing these strong Chinese export business, we are going to be pretty supported in prices, probably move choppy sideways type trade. All right, have a great rest of the day. Talk to you again soon.